All right. Good morning, everybody. Hope you guys are all having yourselves a fantastic start to the AM. Just quick couple things here before we start. Replaced one of my audio cables here, so if there's any issues with the sound or anything along those lines, please let me know, and I'll try to get that fixed here before we do anything too crazy. It looks okay on my end, but yeah, if you guys have any issues, obviously please let me know. Might just turn this down just a little bit. Is that a little bit better? Yeah. So hopefully that's pretty good. Hope you guys are all having yourselves a fantastic AM here. Good job there yesterday, right? Doing very well to avoid what ended up being a very choppy day. And we're certainly looking for a little bit of a resolution of essentially that price action here this morning. Now, from a, I don't know, like a wake up and smell the roses perspective, we have absolutely zero Fed speakers in our way here, right, until much later on this afternoon. So from like an economic calendar, we definitely have a lot less in our way, or a little, to go back to the analogy, right, a lot less thorns in our way here this morning. And I can certainly look for a resolution of yesterday's kind of catch your breath moment. Now, I think generally across the board, right, we've seen price action break down a little bit. We've seen maybe some of that fear accelerate, right, as we've seen in the VIX. But we ultimately haven't seen that much follow through, right, on the sort of amount of volume that we've actually seen kind of accompany some of these recent moves. So really what we're looking for here today is either more kind of, follow through or downside momentum that kind of would give us, right, that sort of, 5-10% move that would be a pretty healthy pullback. Or, right, we're looking for a resolution of sort of that consolidation to then push back up towards sort of that 5,200 range. So pretty much across the board, that is going to be the narrative. I would say that I have a slight bias here still to the downside, as I would argue that's probably more where the trending price action is kind of basing, but we can ultimately go from there. One thing that I also want to start tracking and kind of keeping a little bit of call attention to here is not seeing too many fake outs in the pre-market. So that's one thing we saw there yesterday, where yeah, basically the lower low of the day was overnight, and the higher high, right, was overnight. So we want to maybe be a little bit careful to start to track that pattern a little bit, but we'll keep an eye on that basically over the next couple of days, and just see if something really comes from that. But that was kind of catching my eye here a little bit this AM. Kind of thought about it a little bit there yesterday too. So maybe it's just confirmation bias, but something that I do want to start kind of keeping an eye out for here over the next little bit. So with that being said, right, let's start mapping things out, figure out what we want to do, and hopefully get ourselves going with a nice trade or two here this AM. So good morning, Suresh, Steven, Salstein, John, Topher, Gary, Brian, Craig, Greg, and Michael. Hope you guys are all having yourselves a fantastic AM. And yeah, guys, all right, let's get after it. So start things off here with the index writer S&P 500. Hey, Tranquility, how you doing? And we're going to be looking for a essentially consolidation breakout, right? Why am I getting to that conclusion? Well, yesterday, red candle, decreasing volume, and then a gap up here this morning. So no real strong indication of trending price action there immediately. Although in the bigger picture, right, we're probably arguing that we have a little bit of a bearish trend. So what we'd like to see here, right, is an opening range breakout in either direction with a slight bias here to the downside, where we could target sort of yesterday's lows, and then eventually maybe that we had 50, 60 yesterday, right? So, I mean, if you can get a 60, 70 point move, that would be pretty awesome. And that would be probably the bias. Alternatively, right, if we do get a breakout higher, the volume standard would need to be a little bit stricter, I would think. And maybe I just have be a little bit slower, right, to wanting to be very aggressive to the upside here. But if I can find good downside momentum, yeah, I'm absolutely in play. The reason I want to be more patient, right, on the upside is I just have no evidence of bulls really being in control here yet so far this week. So I don't want to be the first one basically storming through the door, right? I think that's probably an ultimately pretty dangerous way to trade. So I'd like to see bulls establish some level of control here first, and then we can go higher. So it is a technical 1 out of 3 here to the downside, and I'm going to still continue to look for that bias. And okay, I do have some flexibility, but I'm more motivated for a downside narrative. And it's worth noting, right? Yesterday was still outlier volume. So it's stronger than average, albeit not stronger than yesterday, which I think is, or sorry, not stronger than the day before, which I think is ultimately what creates a little bit of that downside bias, right? Where, okay, yeah, it's, yes, technically a decreasing standard, but it's significantly greater than what we normally see on the index level. So it's not like that bears have completely abandoned. Maybe they're just kind of catching their breath. Right, and 50.78 is essentially that low, and then we can go from there. Why would it be a 2 out of 3, Kulu? It's a red candle, decreasing volume, gap up, right? Yeah, but we care about the volume's always going to be the same color as the candle, right? So we care is if that volume is stronger than the previous bar or weaker than the previous bar. If the candle's red, the volume's always going to be red. Okay, QQQ. A weak 2 out of 3 here to the upside. I would say not a particularly great looking indication of bullish momentum. Right? Okay, yes, it's a green candle, but it's the weakest green candle that we could see. The volume is, yes, outlier, but still pretty weak compared to previous day. So the thesis here would more be looking for a rejection inside Monday's range, right? So kind of back at that trend line, or get a really high conviction breakdown under essentially that 429 kind of zone. So I'd like to see price action basically develop in either direction there. And I would probably suggest that I don't have a very easy look. Although I could get a breakout here to the upside on a 2 out of 3 to the upside, I think this is the trap play, and I'd rather wait for the pullback back up towards sort of that resistance zone. Just fundamentally, if we do get a breakout above this 434, my risk reward back up to that next point of resistance is just really limited, just because I do expect bears to step in and defend here, and my logical stop loss would have to be around that 430. So just the risk reward to get back up to those highs isn't really justifiable on kind of tech on an index level. So I would be more looking for rejections back lower, because that's a lot more of a reasonable risk reward and call it an easier path, I still think, to the downside. So a high volume fake out or a high volume rejection above that or around that 438 would certainly be the narrative I'm looking for. Yeah, nothing has really changed here, right? High vol, 430 breakout or rejection off of the trend line has room lower. I don't even know if I'd want to play a 433 fake out. I think I'd probably just rather lose the trend line and get like that next chunk lower, or I'd like to see that trend line now turn into resistance or, you know, basically support to the downside. All right. Apple. Oh, man, this thing fucking sucks. Look, you have a chance here to bounce maybe off of that little breakout high. I wouldn't say that this is a particularly good looking day trading setup here. So we're saying, right, that we have mostly trending bearish price action, but we have limited momentum for that price action, right? So yesterday was giving us lower lows, giving us lower highs, gave us a red candle, and it gave us decreasing volume. So we have bears, but the control isn't that strong. So we're looking to see more control step back in before we're willing to be aggressive. In this context, right, we know that we're missing today's price action and we're missing volume. So we want to see increasing volume and we want to see price action give us a setup here to the downside. That would turn that 1 for 3 into a 3 for 3 and give us an indication that bears are in control. Right? So the first thing you always look at, the first element is the color of the previous daily's candle. right? So was yesterday's candle bullish or bearish? Well, yesterday's candle was bearish, so we have a 1, right? Part 2 would be the volume. So is the volume increasing or decreasing? Okay, well, we have decreasing volume, so we're not adding to it. Excuse me. And then we have a gap up, which is a contrary narrative to the candle profile that got established there yesterday at the close. Right? So we have the path of least resistance appears to be to the downside, but we're still missing ingredients or missing elements that suggest we have full bearish control. We can have choppy price action. We want to get clean, easy momentum. That's why we're defining what that standard needs to be for us to be interested again. Okay. Tesla has a chance here to do a gap fill bottom up. And that would ultimately, I think, be the setup that we would need to go for here. Again, not a great volume standard, so we need to see more volume step back up prior to being aggressive here on Tesla. It's got earnings next week. So you got a little bit of space. I would think it has space towards that 161. Your breakout spot's going to be above 159. Or, yeah, 150. You can go 158.50 maybe. And then you can kind of push this thing. So here, right, we've got green candle, right? Green but decreasing volume and a gap up. So 2 of those elements are telling us that we've got bullish control, and the missing ingredient here is volume. So we would like to see that volume profile step back in for us to indicate that we have strong trending price action. So again, biggest volume of the week, that's going to continue to be the narrative. And then we want to see a 158.50 breakout. And that's got space up towards 161.50. So I'll go 160, 161.50. And then we're going back up maybe like 165-ish. At that point, I'll just fill it out basically $1 along the way. So 162. 163, 164, 165. What else would we like to see here to basically be convinced that we can be bullish? Right, if we're saying that indexes look like they could be a little bit weaker and maybe they have still a little bit more of a bearish bias, we would like to make sure that we're getting general market cooperation before we're willing to take any trades here this morning, right? We want the internals that we're basically looking at to be syncing up and being consistent instead of telling us one direction one way, right? One direction another, because ultimately that's then going to end up with just a chop day. We need general cooperation across the board if we do want to get that kind of consistent follow through here, and that's what we need to be cheering for. So yes, Tesla could be interesting here higher, probably not going to be the priority, and we'd like to see this ultimately fail if we're going to be particularly bearish, and we'd like to see our bearish setups fail or not trigger if we're going to be playing this gap fill to the upside. Ultimately, Tesla could give us kind of between a rock and a hard place, because gaps love to get filled. So it could essentially be that gap gets filled here pretty aggressively, then it rejects, and we can play that bearish narrative. But I'm not going to front run anything here too aggressively, and I'm going to default towards playing the index-based setup versus the individual name setup. Okay, Microsoft, inside bar, decreasing volume, gap up. We would look for still a consolidation breakout. The trend that we have established here appears to be on this wedge pop. So we'd like to see a downside break for that to occur. We're about 1.5% away from that happening here this morning. So I'm going to stay away from this, as I think it's just got a little bit too much work to do before I'm interested. Alternatively, I guess you could look for like a 420 rejection, right, which would be a retest of that trend line and then push back down towards sort of Monday's lows. But I think the primary objective would be trend continuation, and that easier trade would be under 413-ish. So one to watch versus one to trade here today, maybe in play for tomorrow. Meta, almost the same thing. Inside bar, right? Yeah, inside bar, inside a wedge. We need to see a high vol breakdown, basically lose that trend line, separate away from that 500 range. Can't seem to break out above, can't seem to break down under. So would like to see that occur prior to being aggressive. Again, it's got earnings here next week, week away exactly. So I do think we'll get a move prior to that event occurring, but I don't think that's going to be here today. Okay, Amazon, one of the grossest looking dojis you could possibly see here, but we're establishing now a third or fourth point of contact on this trend line. So we could definitely argue we've got a nice channel that we're stuck in here now. And so middle of that channel, low volume doji, in the middle of kind of that range. Again, I'm being told here more consolidation than I am getting an indication of trending price action. So I don't need to front run this narrative here too aggressively. And again, the internals here that we're seeing on kind of mega tech are the same internals that we're kind of seeing on QQQ, right? Where we're kind of gapping up, being a little bit indecisive into an area where I've seen a lot of selling pressure here before. And a lot of those individual names are telling me that consistent story. So I need to see that resolution here before I'm willing to be aggressive. And I'd rather catch the middle of that wave than being kind of faked out trying to catch it first. So when we do get that follow through, we've got enough nervousness and kind of volatility in the market where we will get paid on that move. And we don't need to basically be draining our mental capital fighting for scraps here this morning when we can wait for that 20, 30, 40 point moves like we caught last week. Okay, AMD continues to look like hot garbage. So I'm going to stay away from this. Right, fake out higher, higher high, higher low, but we can't sustain and gap up right above sort of that spot where you've seen buyers step in. So it's not occurring on volume. We're seeing kind of a decreasing volume profile here consistently, maybe coming up against some sort of trend line resistance. So no real indication that we have a level of enthusiasm here that's worth our time or capital. So I'd like to see that enthusiasm show back up prior to being aggressive. NVIDIA, right? Inside bar, consolidation, opening up in the middle of Monday's range. So very limited reasons to be aggressive here. We could be forming a little bit of an ascending wedge pattern or just a wedge in general, right? Your ascending wedge would be resistance from Thursday, April 4th, and then on Monday. And then your wedge, right, would be, again, Monday's resistance. But your kind of breakout spot is about a week back at the 26th of March. So regardless, right, of which pattern you want to fall in love with, it's the same point of contact or the same area of resistance. We would need to get up and over sort of that 900 range and give me some separation above that 910 to then get consistent follow through to the upside. So a little bit of a ways away from that and the easy one to stay away from. Netflix, inside bar, going into earnings tomorrow. Consolidation into earnings tells me that it's waiting for something, right? Waiting for news to drop, waiting for market to pick a direction, and I'll let the earnings drop prior to making that decision. Again, right? Another narrative of we're waiting for something, right? We're waiting for consolidation to resolve itself instead of getting actually a very clean story. All right, Google, Doji, green candle, gap up, week 2 out of 3 here to the upside. Again, indecisive price action after a pullback, not really breaking down from this spot, not really breaking out. I would say it looks a little bit more maybe like ES than it does specifically like a QQQ. So maybe Google could act a bit more like a leading name here if we do get that breakdown lower and we could push back down towards sort of that 150 range. But I don't think that this is particularly enthusiastic or going to be worthy of a lot of my attention. So generally across the board, I think we're seeing a very similar story. I almost feel like I've blasted through this prep here very quickly this AM, but it's lack of trending price action, lack of immediate momentum here this AM, and we basically want to see how the market is going to react to some of the macro narratives that are kind of floating around and kind of the start of earnings season. So this is not going to reward us here for being particularly aggressive until we see a significant amount of buyers or sellers stepping back in. So the standard, right, if we can get bigger momentum than what we saw there yesterday, more aggressive opens than what we saw yesterday, then I think we will have a bit more of a green light to be able to push and kind of think, hey, I might have a trend day or some good follow through here. Otherwise, I want to be careful, basically see one side fail before I'm willing to take a trade. And if I can get a consistent story across the board, then yeah, I can look for relief bounces or breakdowns to basically take advantage of those moves. If I don't get clean price action, then I'm not going to be that interested. So I think it's really the same story across the board, right? Like even crude has given us basically a tight range here, right? Even gold is kind of catching its breath. Even Bitcoin is sort of, pulling back and consolidating. So we're looking for basically this global resolution. Maybe the catalyst we need, right, is like a Nancy Pelosi alert that she's now loaded up her entire portfolio into some obscure small cap, right? I don't know what's going to kind of wake up this market here this week, but we need some sort of trigger to create that volume event. When that does come together, I think we've got a pretty good opportunity to hopefully catch some follow through, but I'm not going to be very aggressive until I need to do so. All right, so Bank of America request here by a member. This is something post earnings that you want to be a little bit careful of, right? The story that we're getting from the earnings is that it is a beat on the revenue, right? A disappointment on the earnings per share. Now, I haven't looked at the earnings call. I don't know what they forecasted, so I can't forward project here too much. But what that tells us, right, is that one bit was good, one bit was bad. So that's relatively indecisive narratives, right, from their earnings report, just from like a very, very basic perspective. Now we're kind of giving us a very small gap up post earnings. And that's, again, right, not really telling us that the market has given us a very strict reaction to that earnings narrative. So I would be patient here, see if you can establish something, and then look for a reaction once you have like an extreme event occur. So generally after an earnings, what I love to see, or my favorite type setup, is like a really positive earnings drop and then a big gap down, or a really negative earnings kind of drop and then a really big gap up, because that gives me like a reason to mean revert. If the basically narrative is kind of indecisive in the backdrop, or the kind of financials, quote unquote, are a little bit indecisive, then it's hard for me to mean revert to that indecision. I don't really know what that trade looks like. And so it becomes an opportunity to basically filter that idea out. Any other requests here, guys? Anything else you guys want to go over? I think like Tesla is a better example over that like mean reversion idea, right? Okay, so it's not quite got the yeah, Malik. So do you see how this there's a pre-market price here? It says like 158.09. The price in yellow. Do you see that? All right, and then do you see the price below that in red? So like the yellow price is 157.97. The price in red is 157.11. So that price in red, right, is, yeah, we'll talk about that in a sec, Michael. So that 157.11, right, is the close price, the price that Tesla closed at there yesterday, and it's indicated by that red line. This yellow price is the implied open. Yeah, the leg shouldn't be that bad. Double check your YouTube to make sure that you have the red besides your button. It should be about 3 seconds at most. But yeah, so the gap, right, is basically the difference between the implied open and the previous day's close. So yesterday we had a close price of 157.11. Today's implied open is right now 158. So we have a gap up of approximately 89 cents. So that's that, right? It would be a gap down if the implied open was less than yesterday's close. So it's really the difference between the open and yesterday's close in either direction. And it's a kind of an indication of what the pre-market price action is going to be like. So what that should tell us, right? A gap up is more bullish, right? Whereas a gap down is more bearish. And so we can get some hints over which sort of direction the price wants to move here based on sort of what the we'll call clues are this AM. All right, so VIX, right? Or you asked for VXX. It's the same thing. But essentially, right, it is a good indication. So VIX will influence two things here primarily for retail day traders. One, it's going to make or change how expensive your options contracts are, right? So for those of you who are trading options, if you have more implied volatility, right, in the market, then your options are going to be a little bit more expensive. So that's one thing, right? But the other thing is it's a rough indication of sort of how much fear there is in the market. What you often see in low VIX environments is you see kind of volume disappear and you see price action basically grind higher. When you have, we'll call it higher volatility environments, or you've got a little bit more fear in the market, then you often get a little bit more exaggerated moves and you see more volume accompany a lot of those opportunities. So it tends to be a little bit of a filter for me to want to play or to filter out setups in certain directions. If I'm like in a 13 or 14 VIX environment, I don't really want to be looking for stuff here to the downside because I historically have very limited evidence of those downside plays actually giving me kind of consistent follow through. Whereas if things can get a little bit more elevated, then from like a blanket perspective, I can have a bit more flexibility over what I'm willing to trade in which direction. Now, I still want to be looking things that follow my sort of systematic plan, but it gives me a base filter to say ignore 3 for 3 days to the downside, or to not think that I have trending PA lower. So yeah, when you see price action creep down, you would anticipate that volatility is increasing or fear increasing, and you'd like to see that kind of like an inverse relationship, right? So if VIX is going down, indexes should be going up, right? If VIX is going up, indexes should be going down, as like a rough guide. It's not a perfect correlation, but as a general benchmark or kind of thought process, that would be a really basic way of looking at it. Any other questions here, guys? We got 3 minutes till market open. Bias is to the downside, looking for opening range breakouts that give me a good continuation chance to the downside. Hey, Rusty, how you doing? Hey, Gabe, how you doing? Hey, Dwayne. All right, guys, if no further questions, then appreciate you guys all tuning in on Twitter Spaces. We'll do another pre-market prep here tomorrow at 9 a.m. So hopefully you guys all tune in then. Best of luck, happy hunting, and please stay safe out there. Peace. All right, DTR members, I'm just going to make myself a quick cup of coffee. I'll be back here in a minute, but bias is to the downside. All right, guys, so let's see how the day wants to shape up here. Obviously, priority is for us to identify, right, clean trending price action, and then hopefully, right, we can get ourselves an A+ setup. Same thing I struggled with yesterday. So I had a theory I was trying to test out, but I don't know if you guys can see, but up here I've got like SPY long setups, and I've got a various different basically chart layouts that I can use. Sometimes some are more annoying than others, and I thought maybe if I have them all set up on the chart layout, it wouldn't give me that trade of 8 sharing restriction, but still got that same alert here. What I've then tried to set up is for it to show my executions as like a line. So we'll see if that works when a trade, if a trade gets placed, I should say, more or less. But hopefully that will be a little bit more transparent for everyone, so you guys can see it on the screen without having to ask. But yeah, we'll try to keep working on that and figuring it out. Yeah, I run out of space otherwise on the screen, so yeah, that's why. But happy to work with you guys on that. And yeah, that's about it. So let's have ourselves a big day. Hopefully we can get ourselves some nice price action. Would like to avoid some chop here if possible. And again, right, no reason to force anything unless things are perfect. So that's going to be the priority, right? Yesterday it was tough to avoid price action, right? It was a day that felt like it was trying to lure us into making a decision. And I'm going to be basically aware of that same bias here today from markets, right? If they're going to try to trick me into doing something silly, then that's probably not the trade that I want to be taking. And so it's going to be my obsession, I think, for lack of a better term, to essentially avoid those traps here today. So again, I'd rather be flat on the week, right? 0 for 0, not taking any strikes than taking a strike just because I want to feel like swinging again, right? So got to be disciplined. I got to be patient. I got to control the variables I can control. And if that means I got to have some of the world's worst self-talk as I talk myself out of trades, then so be it, right? That's what it's going to require me to do. I don't think that's necessarily going to be the case, but I do want to identify just conditions where I have an edge and be okay walking away from stuff where I just don't feel like I have an expectation of being green. So that's the obsession here today. I'm going to ignore everything else. I'm going to try to fight whatever other pressures might be sort of there and then kind of figure it out. Fair? All right, beautiful. So still looking for that downside break, right? How do you feel about this opening range? Reasonable, realistic, aggressive, conservative? Yeah, it's reasonable. I wouldn't necessarily say it's small, but it's real. Like, it's nothing too crazy, right? It's fine. Why do we care about that? So what does that give us sort of a thought process for? What are we trying to ask ourselves, basically? Yeah, it's a risk management thing, right? It's a realistic profit targets thing, too. Like, if the opening range is 30 points, well, we're not going to think we're going to get 60 points, right, as kind of consistent follow through. So, does the volatility make sense for what the anticipated range of the day? Yeah, totally, right? Getting a move that's 13 or 14 points from our entry price is totally reasonable and would give us a situation where it's easy to get an appropriate risk reward, right? And the position sizing that we want. So helps us to, give us a little bit of potential for sure. But we have no setup trigger here yet. But there is some potential. I mean, even on the longer time frames, even on the 10 min here, it's a 9-point range. So we're not bad. Like, that's pretty reasonable in either direction. Now, I think bullish is still a bit more challenging than it is to be bearish. I think that's still a bit more of a more difficult path. Let's see. Like, Tesla are bull in shining armor here today. Inside barring, so no reason to be aggressive yet. I really dislike how the, well, I don't know if I dislike it, but it's annoying that the market's given us like 3 days on, 3 days off. Like, we have an oil rigger schedule. It's like making me feel like I'm doing shift work again. Yeah, I mean, like, generally expansion leads to compression, right? Compression leads to expansion. So you have a pretty big move based on some fears, right? Of everyone fear-mongering World War III. And then it's like the market's disappointed that we didn't fully dive into nuclear war over the weekend. So now it's like, okay, what's next? So a couple ways we can potentially play this, right? Depending on if this can give us an increasing volume on this breakdown, we could potentially look for something along those lines, right? Stop losses have to be 51.1625, entry above 51.1175, target 50.97. Now, ideally, I would want to see a deeper pullback than that, right? To be within sort of 4 points. So I'd be looking... yeah, 51.12.25, something like that, if it could give me that look. So we don't have quite the setup trigger here yet. We don't have that volume confirmation yet, I should say. You're close. Bad close. Basically unstuck there every time, so let's see. Being patient freaking sucks. Yeah, Kulu, if you go into the trading Discord here, there is a video in the trading docs. That kind of explains, yeah, how I set up the indicator, what the settings mean, all this kind of stuff. So I'd watch that. That'll answer all your questions. Yeah, Joe, it's going to be a... at least you know the spot you're waiting for a resolution from. But man, I think it's going to try to trick us until it really breaks out of there, right? Yeah, that's annoying too. Why is it like whenever markets consolidate, it always feels like the C plus setups move? So breakout above here, right? Not necessarily an indication that we have bullish trending PA here yet, but we can be respectful of it. It's kind of a funny way of treating price. Oh, whoops. Well, pretty similar story to what we saw there yesterday, or sorry, on the ES, right? Where we have a slight bearish bias, but we are assuming choppy conditions until we can get a resolution in either direction. Yesterday, right, we had this volume standard. Today, we're pretty significantly lower than that on the 5-min. So it's hard to suggest that, yeah, basically price action or that we've established control here. I guess a wall you would anticipate, though, being defended with significant volume, right? Yeah, Malik, no, it's not a stupid question at all. So 50.78 is approximately yesterday's low. So that was that level. And then 50.60 was essentially then the next area underneath that. So the sort of the low of that next shelf. So yesterday's, or sorry, this morning's low around that 78 area. Then that low of that next shelf about that 50.60 area. Right, Michael, if we're going to say that it's a wall, then we should see a wall-like amount of volume step up and defend that area. It's a good setup trigger, but we need to get confirmation that your idea is correct. Otherwise, it's kind of just a random number, right? Or it's a random line, or it's basically just a reason to look. It's not a reason for us to enter a trade. We have an idea. We want to define what makes our idea correct, or if we saw a seller step in, what would that look like? And then where are we wrong? Where could be our reasonable profit target? And then once we have all three of those elements, we can ask ourselves, okay, what should be my entry price and position sizing? So always in that order. But yeah, we don't want to fall in love with something because a rejection on low volume or a sell-off on low volume is not an indication of sort of a trend reversal or a invalidation of consolidation. We need to get absolute conviction that the price action is basically flipped personalities. Doesn't have to be based on multiple rejections. It doesn't have to be like it rejects 3 times. But I'm a big believer, right, that momentum is what moves the market. So if I'm saying that I've had a momentum shift, well, at the very least, that's got to look like bigger volume than what I've seen at those levels. And that hasn't really occurred yet. Right? So I need some sort of evidence that the momentum has changed. It rejecting off the price is not enough for me personally. It's got to be rejection off of a price with volume and a strong candle. That's what I call confirmation. So now, right, we have a setup trigger. We want to see this break, close, and hold under this range on either an increasing volume profile or right to hold, and then the next candle also hold, where we can look for basically that to follow through. It'll depend on what setup we actually get here, Joshua. So if we get this candle to give us this criteria we want, then stop loss would be about that. It could be 51.1375. If it's the breakout hold and then pullback, then we'll be looking around that 1450-ish. So we're not quite sure yet. Basically what we're trying to do, right, with this opening range is to have a little bit of flexibility over how we define what a breakout is here. So if we get that breakout where it gives us that arrow above, then yeah, this will be our confirmation candle, and we can look for a stop loss at the high of our confirmation candle. If not, then we're going to have to do like a 2 candle confirmation, which at that point, the midpoint or that midline would be the reasonable target. So we're still waiting for that information still. But good question. It's exactly the way we want to think about it, right? It's okay, I've got something that is looking like it could be going in my favor. How will I be able to define if I'm right or wrong? And then how can I basically work backwards to find that? Now, this is where we can start to use our deduction skills, right? We've got 50 seconds to go on this candle. We're less than the opening range, and we're very likely going to get an increasing volume standard here. So I can start to set up my order so that if this thing does give me the confirmation I'm looking for, I don't then have to rush that process. So now, right, I can bring in my order window and I can start to fill in those details because I have at least a partial chunk of information. So I know my stop loss needs to be 51.1375. So I can tick that. We want to see this candle close with a strong shape. So wait. And not great. So what I would like to see here now, right, is basically a 2 candle confirmation. So can I get a candle that will break, close, and hold, and basically hold outside of the opening range, right? This is the first candle we've seen here all day that has been able to establish price action under these lows. So I'm pretty happy to wait to see if we can get another candle that will hold it. If bulls can't reclaim control here, then I would have a pretty stronger thesis, we could say, right, of having nice price action. So now that I know that it's a 2 candle confirmation, I know that my stop loss needs to be approximately 51.1475. So I can change that. Right? And then based on that information, I know that from 51.1125 to 51.1475, it is still less than 4 points. So I can start to size my position appropriately, right? If I buy 10 contracts and I'm 3 points away, then I'm still within my max loss number, and I'm kind of willing to then look for an entry around that zone. So I'd be looking if, right, you don't have confirmation here yet, if I could get confirmation around 51.1175 as like an ideal entry zone. But we want to see bears be able to hold under this opening range prior to making that decision. So be patient here still. We got a little bit of work to do. Yeah, we basically want to see, bulls not be able to get back in, right? Yeah, D-Wade, so kind of exactly what I defined there, right? If this candle gave me a strong confirmation that I was willing to accept, then that high would have been my stop loss, right? Same way that we like to do it. But in this context, right, I got good volume on that separation away from that opening range, but not a good enough candle shape. So I'm going to want to see some sort of form of confirmation prior to me, basic confirmation of that holding, right, prior to me then taking that entry. So when I then do a 2 candle confirmation, or I'm waiting for another piece of information, I use the midline. If it's a legit setup on that first one, like it was on Monday, right? So like this setup here, right? Like it was on Monday, then you can go the top of your confirmation candle as that look. Now, I'll always try to define what that is right prior to us entering a trade, but we will have a chance here. So looking close. Stop loss would be 51.14.75. And we're going to look for an entry right around here, guys, right? Oh, man, did I not get a fill? Oh, that is brutal luck. Fuck's sake. So I'm canceling my order here. Fuck. Gave it to me too. So being patient here, right? So, okay, a little bit annoying that I didn't get a fill. So I'm going to cancel my order, take a deep breath, right? And see if I can get a more aggressive pullback here potentially if I reset this up, right? So no worries. If a trade is strong, it's going to give me more than one chance to enter. And I don't now need to be more aggressive chasing this lower. The mistake, right, ultimately here was mine, was that the second this candle closed, I didn't have my order submitted and ready to go, right? So I gave myself a reason to make my entry non-binary and got punished for it, right? Oh, fuck. Everyone understand? Make sense? So being careful here again, right? Being careful. Like I said, guys, my order right now is canceled, right? I'm not hanging anything here. time? 10 o'clock? Oh, you gotta be fucking kidding me. Anyone catch it? Oh, nice work, Jose. Well done, man. Well done. So this should be your scale out here. Right, you're up 2R. So, yeah, push your stop loss. Hopefully half of your position trend, stop loss to entry price. And see if you can now get follow through towards, yeah, that red line. Nice work, Dwayne. Nice work, guys. Ah, I'm jealous. Well done, guys. Following the plan. Really, really well done. So then, guys, right, if you're out already scaled out at 2R, next target, like I said, would be that red line where you can close like a half of what you have left at that point. Fuck's sake. This game is so cruel. 15 seconds of just not doing the routine the right way. 15 seconds. So good volume. How aggressive do I want to be here? I don't know. And this could be your re-entry opportunity. Yeah, it's getting stuffed at that previous low. So you guys are in pretty good shape here. You're going to definitely, well, I shouldn't say definitely, but I think you have a good chance of breaking under towards that 50.97 area. And then see if you can hold out for that 90 or 78 plus. Oh, the pain. So take your next chunk off here, guys, at that red line, right? Have that order set up. There you go. Man, fuck. Okay, good volume on the 5-min. Oh, I'm very jealous, team. Very, very jealous here this morning. fuck does that happen? Anyone still in this? Nice, Gabe. Nice work, Alfred. Let's go, guys. Nice work. All right. So, see if we can keep getting a bit more further follow through. Try to still stay a little bit engaged here. So, what's your guys' plans on how you're going to manage your remaining chunks? So, what price? I don't know what I was going to try to say there. What price is your stop loss set at? Where's your next profit target? And let's see some P&Ls, guys. It sounds like you guys all caught a pretty nice win here. 6 contracts, 10 points. That's a nice day. What volume did you want, Malik? So let's start with that question, right? What volume did you want? So why 95, Jose? Where'd that number come from? Not to say you're wrong or right, but I'm trying to see the logic. Okay. So I understand that, yeah. For me, that was fine because I was willing to be a little bit more aggressive to the downside. But I can understand why you did it. I would say the bigger factor, more than anything, is that it then followed up with the lowest bullish volume of the day, right? So if we're going to say that we want to see after a trend breakout, essentially, our goal is to see weak bulls or bulls fail on the second least or the second worst bullish candle and the lowest volume of the day, we can kind of argue that we then have weak bulls, right? Look, the reality here, guys, I'm trying to stress this as much as I can, is that we're not really behaving in absolutes here, right? To a certain extent, trading isn't about breaking your rules, right? But I think if you're, sometimes I feel like I get stuck in a spot where I'm trying to be too specific. It's got to be too whatever, and I overthink what could be a good entry, right? Or a good setup. So the idea here is to be a little bit more flexible over what those concepts can look like to take advantage of markets that are behaving a little bit differently than they did previously, right? So I'm willing to say, okay, I've got increasing volume. If I see a weak shape on one or a weak shape on another, that doesn't necessarily mean that the market is wrong or my idea is incorrect. I just maybe want to be a bit more cautious and wait for a bit more information before I'm willing to be bearish or bullish or whatever. And that's really what I'm trying to do. I'm trying to look at more characteristics. So separation away on increasing volume, see us hold through that range. That's a pretty good indication that, you know, the other side is kind of won and one side is given up. And maybe it's a little bit more of a repeatable concept than it is to say, okay, I need volume on this candle to be 12,396 contracts. Like, I think that's a little bit like I may be focusing then on the wrong detail. The one that's like not the best. It's not the one that's telling me maybe the truest story. So I'm trying to be flexible there. And the goal, right, is not to be flexible after I enter a trade, right? Is to be defining what that looks like. So just having multiple definitions of what strength to the downside could look like is what that flexibility is, right? It's not then that, oh, I haven't seen this, I haven't seen that, that tells me I shouldn't jump in or I should jump in. It should be, I'm just willing to have two definitions, right, over a bearish breakdown. Or I'm willing to have three definitions. So I have a little bit more flexibility. It's not that I'm willing to make things up. It's that I'm willing to define that strength in different ways. That is so devastating, though. Jose, to be honest, Jose, I would target closer towards that 5190. Or sorry, 5090. 5095, when you have this lottery ticket, try to get more follow through, right? I don't want to say be greedier, but you've got more reasons to think that, hey, we could get a bit of a shelf here. Like generally, once you get to 2R, Jose, I like to go level to level, right? Because you've had that big move here. You've got a good indication that bears are in control. So you can often get a little bit more oomph than you expect. Right? Alternatively, you close half here, right at that 50.95, and you try to hold on for a bit more past that. But if I'm going to be greedy, I want to be greedy when I'm risk-free. And that's the situation you're in right now. So you can turn this into a net 5R win, right? Basically by being greedier here without any excess downside liability. So it's almost not saying it pays you to hit on 16 here, but you've got pretty good value for not having to really do anything besides seeing if the market can keep bleeding. Fuck, guys, I'm jealous, so jealous. Oh. I'm staring at my Apex account. Buy order, or sell order, sorry, 51.11.75. Stop loss 51.14.75. There have been 10 contracts per account. Oh. No, the way that I would like to de-risk here would be by taking profit as my P&L is increasing. There's very limited value in now basically closing it as your P&L is like getting worse. You want to be in the habit of closing it as your P&L is increasing. Because that's what your stop loss is there protecting you against, right? Yeah, Kulu, no problem. Right now, I have 3 funded 250Ks and working on my 4th funded 250K. So again, good volume, lower lows, lower highs. No real indication that bulls have reclaimed control. Still under that psych level. So I would say you've got very few reasons to want to be more aggressive. Yeah, so I scale out using the R system, right? Until I'm up 2R. So if my stop loss was 3 points, my first profit target, 5108, give or take, right? Then 5105. And then from there, next profit target was the red line, right? So about 5100, man, I can't talk. 5097, right? Which at that point is a 4R move, give or take, 5R move. And then at that point, right, I would say in theory, my next target would be like 5078 on that final chunk. Once I'm up 2R SSB, then I no longer go the R system. Then I go level to level and really try to get those big follow throughs. Get that 20 points, get that 30 points, whatever it might be. But until I'm at that level, my objective is to try to de-risk as consistently as possible. So the R system makes it easy for me to do that. Man, I can't believe I missed this. Again, right? Lower low, lower high, weak bulls. You have less reasons to think that it's bullish control. Obviously, you're not maybe being sold the narrative that bears are wildly in control. But here's the point, guys, right? Once you have, basically, once you're risk-free, we still want to behave the same way we normally behave, right? So it's make a plan, set your plan, and be willing to do something that you can repeat trade after trade, because then you can notice the pattern in your decision. So the reason I keep my stop loss on my entry price is because it removes the desire or the extra complication, right, of having to decide or come up with a technique of where I place my stop loss next. So I don't really have a very good repeatable version of how to do that where I feel like I'm not leaving any money on the table. What I've kind of realized is that keeping my stop loss at my entry solves 70%, right, of that issue. And so it's enough to sort of give me a reason to be pretty chill. Now, if I saw like I'd probably want to still have like some break glass in case of emergency reasons, right? If I saw some sort of like volume bar on a second most bullish candle that was the biggest volume of the day at these lows, and in any other market conditions that would be a reversal for me, okay, yeah, that's a reason to say, hey, you know what, maybe my plan that I had wasn't good enough and I can excuse myself for closing this. But really, once I'm at that risk-free point, it could literally be set your stop loss where you want, set your final profit target, and at the end of the day, it's either going to have hit or it hasn't, right? And so you can kind of behave that way where it's still a little bit binary. The more we can think in that context, the easier it is for us to be consistently successful. But that's a good problem to have, right? Ultimately, being up 5R, getting that kind of awesome follow through and being risk-free at that point, it's not really anything we need to be too concerned about. The one thing that I am starting to think about a little bit as I'm ranting and raving here is that maybe the first scale out at 1R doesn't need to be that aggressive. It could now be, because our last 5 trades that we've taken with this or would have taken with this, you're getting to 2R almost immediately. And so maybe we could be making a little bit more money here if that first scale out then occurs at 2R instead of 1R. and then pushing your stop loss once you're up 3R or something along those lines. That might create a slightly larger average win for when things get a little bit choppier, and again, right, create more margin for error for us when we're successful. If our first scale out, a quarter of our position is at 2R, then our worst case scenario, right, if we push our stop loss or keep our stop loss where it is a break-even trade. And that's not a bad place to be mathematically, right? So if we can get to that as well, obviously that could be a way of, basically maximizing that P&L. And unfortunately, the only reason you can start to notice those patterns is because you're consistent, right, in your initial execution of your take profit. So end of day, right, when you're going through your trading and you're asking yourself, hey, did I follow my plan? What was good about my plan? What was bad about my plan? If you're consistent, right, you're going to notice that you're maybe scaling out too aggressively too early. But that's always the mindset. Dwayne, what was the P&L before you leave? What was the P&L? That's so crazy. Dude, let's go, Dwayne, man. Congratulations. Holy shit. Make sure you give us a nice daily debrief with that, right? That is freaking epic. Oh, jealousy intensifies. Fuck. So if anyone has any contracts left, right, I would close one here at this 1590, or close half your position at 1590, and then that last chunk about 10 points away. Love it, Dwayne. Love it. Yeah, it's a great reminder of why this is such a, it's a better energy use, right? Because, dude, a 12K day, I don't care who you are. If you just make one trade and you make 12K a month, you do not need to feel the pressure to make more decisions. So, golf clap for you, sir. That is awesome work. Freaking stoked for you, man. Does everyone understand the logic behind this trade? So I know it's a little bit late for us to get an entry here, but does everyone understand what we did, why we did it the way we did? And yeah, probably if you guys want to twist the knife in, happy to explain why I missed my entry, or how I missed my entry and how I would solve that going forward. Yeah, Joe, absolutely. So what we're looking for here, right, is basically trend continuation price action. That is the general theme, right, that we've seen here in the last little bit. So last 2 days. And we're going to say that the opening 5-min, 3-min, whatever bar is establishing basically that range of consolidation. Yeah, I'll go over that here in a second, Kulu as well. So once we have that consolidation breakout occur and breakout in the direction of our bias on volume, this candle, right, this 951 candle didn't give me an incredible confirmation standard, right? It's a good volume profile, but a bad candle shape. So I wanted to see a little bit better confirmation that that was actually going to hold. Like in reality, right? If you treated that as your setup and confirmation candle, you're getting in that trade, you're not getting stopped out, and you're making plenty of money. Let's go, Jose. Let's go, man. Yeah, make sure you give us a nice little daily debrief with that as well, because that's incredible work. So wanted to see then basically bears be able to hold outside of that range. Got that then occurring on the weakest bullish volume and weakest candle that we've seen here all day. So I knew that a retest back into that range would give me an opportunity for for bears to reclaim control and push price action down. We had done nothing to invalidate that. So what I then wanted was a pullback within 3 points of that midline, so I could get the basically sizing that I wanted on that trade. And that's exactly what occurred. But I honestly just didn't have my order set up in time to take advantage of that move. So sloppiness on my part, right, was that I had the order set, but I didn't click the trigger essentially, and missed a fill by a quarter of a point. So bad luck there on my end, but glad everyone else was able to set it up. Literally the high of the entry candle was 51.12. Our entry target 51.11.75. So brutally painful, missing that on what would have been a monster day. And then that's the reason I canceled my order, right? So once the move then makes a lower low and gave me then that 2R follow through, basically I was just emotionally attached to the decision, right? So when I then have that emotional attachment, if a trade pulls back into my zone, yeah, it would have been that red line. So 51.14.75. So once it makes that move without me, Kulu, I'm basically saying, okay, I missed it. I screwed up. If I now enter this trade, I'm probably trading it emotionally versus trading it rationally. So the only way I would have wanted to have retaken that trade is if it gave me another setup version of it. So I missed it on the on the 3. So I could have looked here on the 5-minute time frame, but it then never pulled back into that zone to give me a re-entry opportunity. So if I miss it on one signal or on one time frame, then I don't want to just like randomly chase it and break an execution rule to take that trade. I want to reset that setup on a different time frame and basically go through that process again. So it's just a way of like hedging myself emotionally, because if I end up chasing a trade, then those usually are the ones where I really struggle to close those stop losses, right? Or I ignore profit targets, or I just get greedy on that because I feel like I missed the move. So I need to basically protect myself from that by resetting basically the trade. Does that make sense? Yeah, so on this one, like I said, my max loss here would be 10 contracts. If you go into the opening range breakout strategy document, it gives you a breakdown of sort of your position sizing. So I would take a look there. But the base calculation is your max daily loss should be whatever your max daily drawdown is divided by 5 or 6, and then kind of work backwards that way. But yeah, please take a look at those resources as that chart is available to you. Joe, did that make sense? Yeah, the position sizing one, yeah, the DTR opening range and stuff like that, it's in the trading docs. So if you go here, the message on March 10th. But in general, Joe, it's the concept is, can I find what the general daily trend is of the market? Can I break out towards that trend? And then can I get a weak pullback into my entry zone? That's essentially the three things that I'm trying to identify here. If I can, then I have a pretty tidy edge. I mean, in the last 10 days or so, right, I think there's been one losing example of this setup for us on the 3-min time frame, which is awesome. So really, really good. It's working really well at the moment. So it's a nice little edge, I think. I like it a lot. It's better than I think the other version of the opening range we talked about. Or it's a better evolution, I should say. So there's a bunch here. But if I click this one, oh, that's where we go. Brings up this. I don't think it'll be different. I still can't believe I missed this fucking entry. Oh my god. Oh yeah, I mean, cooler. It's not the end of the world. I know that the market isn't going where. I know I had the right idea and all this kind of stuff. It's just it's an avoidable mistake, right? So it's like every now and then you got to kind of slap yourself to remind yourself what you got to do. Oh, that's annoying. Yeah, look, if the execution error is that I just didn't click submit, that's a better one than like saying I fucked up my stop loss or missed a price. Like, did everything right. Identified a good entry price, sized my position accordingly. But yeah, I kind of just got maybe caught between trying to write it in the Discord, trying to set up my order, trying to talk it through, that I got the order wrong. That happens. It's the risk I take, right, of you guys basically being my recipients of my stream of consciousness. So it's all good. Like that, I think a big thing to note as traders is that we cannot hold ourselves to like unreasonable standards, right? I'm gonna make a ton of mistakes over the course of my career. And the distribution of those mistakes is going to be like a little bit random too. So I'm going to have execution errors. I'm going to have setup errors. I'm going to have position sizing errors. I'm going to have risk management errors. I'm going to have all those things. But the basic thing I can't do is essentially compound those mistakes, right? So if I miss an entry, the thing that I want to do the most, right, is chase back in, force a trade, jump in there, do whatever to feel good about myself, to justify, oh, I had the right idea. But generally that ends up costing me more money than not. So the thing that I have to focus on is basically not compounding mistakes, right? If I can avoid compounding bad decisions, then yeah, okay, worst case scenario, right? I'm at 0-0 here today. I didn't actually lose any money. I didn't do anything wrong. I didn't do anything egregious. So I have no reasons to hold it against myself that it happened or to be like that bitter. I know what I need to fix, and that is the we'll call it point of emphasis, right? That I'm really going to focus on here today when I do my daily debrief, right? That's going to be the thing I want to focus on here for tomorrow. Just making sure that call it routine over how I'm setting up my orders is consistent and something that doesn't have to be a mistake. And that's it, right? That's what I learned from it. That's what I take from it. I move on, and it doesn't have to be the end of the world or an element of FOMO, right? This wasn't going to be the trade that made me feel like I was rich. It likely wasn't going to be a trade that made me feel like I'm a good human being. There's too much damage done there already for the market to reward me for that. So ultimately, right, I'm only, I'd be rewarding like a short-term dopamine rush, right? A short-term impulse over not feeling like a good trader for that, but that's not the reality. I'm understanding that this is one decision in the course of 100 that I'm gonna make this year, or 200 or 500 or 1,000. So no big deal. I'm okay. There's a big, very famous study that basically compares people who do cheat meals in their diets versus people who don't. And a cheat meal didn't necessarily have to mean like, I don't know, ordering 5,000 calories of McDonald's when you're trying to be vegan or something along those lines. But the people who expected themselves to follow their diet 100% of the time, 100% of their meals for the rest of their life, like in perpetuity for whenever, the second they had a slip up and succumbed to a craving, they would fall off the wagon and their diet would deteriorate. Whereas the individuals who expected themselves to, yeah, follow it 100 or follow it 90% of the time, or something along those lines, right? Those are the people that would be like, oh, okay, it's just a little mistake. It's not the end of the world. And if it's not a big mistake, then it's easy to get back on the wagon, right? The not holding it against yourself thing, Michael, is that what you wrote about? Yeah, I think that's spot on, right? We just have to have realistic expectations over what kind of mistakes we're okay making. It's no big deal. We don't have to be perfect. Like, perfect is unreasonable. It's not going to be the standard that we achieve. Any questions here, team? Anything you guys want to go over? Kind of on hands here at this point. Not too much for me to do. So that 90 handle, right? I reckon it can still happen for a lot of people, but I don't know how much more follow through you have in this immediate morning. Again, another 20 points. Like, that's a great move, guys. So you should be very, very stoked you're able to catch those trades. The fact that some people are doing huge numbers making me very, very jealous. Any questions, team? Any questions? Samuel, you in here today? No, Michael, I would not, right? Simply because I think I have more bearish trending price action than I do have bullish trending price action. So it makes no sense for me to do mean reversion when I have trending PA. What I want to do, right, is when I get an overreaction that is counter to the trend. So on a 1 for 3 day, it's never a dip buy opportunity. It's not the conditions that reward that kind of behavior. You want to look for dip buys when you have a high volume supporting shelf versus selling pressure above you. Because fundamentally, we have no evidence that bulls are in control here. And so we don't want to be front running that decision, right? What you might find some value in here is studying the pre-market conditions and identifying the types of setups that we're willing to take inside those conditions. So for 3 for 3 days, we're willing to play level breakout trades or dip buy trades right in that candle colors direction. On 2 out of 3 with volume days, right, same thing. We're willing to look for level breakout trades and dip buys off of support. But again, right, needs to have that green increasing volume. And then on 1 for 3 days, we need to see trend creating price action. And in this context, right, we had trend to the downside. We want to see trend continuation to the downside. Yeah, exactly, right? If we could find a reversal or rejection inside Monday's candle, that would be the relative dip buy for this trend, right? So if we're saying that this is, we lost the trend line, we're breaking down lower, you would expect bears to defend 51.52, right? Maybe 5,200, and then like that trend line. So in theory, those would be your logical spots for basically mean reversion trades, right? You want to go mean reversion with the general trend of the market. We don't want to be swimming upstream against the flow. Right? It's when we swim upstream against the flow that you often get like the most painful trades. Yeah, so price can often drift lower or drift higher for longer than we expect. So if we're ever doing mean reversion, we never want to be the first one in the reversion, right? We want it to be, a big gap up that's counter to the trend, or a big gap down that's counter to the trend, and we pull back towards whatever the most recent violent price action essentially was, right? That's the idea. Yeah, a double bottom here, right, doesn't indicate that bulls have reclaimed control, especially not on that volume profile. So, yeah, I think a big thing that I see from traders when they're like still trying to find out their, we'll call it technical analysis niche, is they are willing to too aggressively front run dip buys, pretty much. And for me to be willing in a dip buy, say if this double bottom was in play, then I would need this 1024 candle to basically be bigger than that 1557 candle, right? So I would need some indication that bulls have reclaimed control, and that's not nearly enough. So there's two ways, right, that you can invalidate a previous candle. You either make higher highs, right, or you get a more impressive volume standard. Ideally, you do it on both, but you need at least one, right, to invalidate the previous day's price action. If you have a volume base, then you don't need that standard because you have the trend. If you don't have volume, then you want to see that volume standard return. Otherwise, you don't have continuation. So, the reason we systemize our process so much is because it tells us specifically what we're missing, what ingredient we want to see. Once we can identify that, then it becomes easy to be patient and easy to, yeah, basically quantify dip buys, right? Instead of it being a feeling, we can rely on facts, and then we end up not holding losers for as long as we would like. So there's that 50.90. There you go, guys. Congratulations, hitting that next profit target. So yeah, right? Always trust the system. Use the system to train your gut. Once your gut is sufficiently trained, then you can learn how to break the rules, right? But we gotta learn how to play within or draw between the lines before we can do anything else. And that 80 is gonna happen in a sec, guys. Ah, the jealousy. Ah. Wow, I can't believe it hit. Did anyone hold it to 50.80? So yeah, guys, what a trade for some of you. 33, 34 points. Wow. Congratulations, everybody. Yeah, I really like this. All right, guys, any questions? Final call for questions here. Final call. Glad to hear, Michael. Glad to hear. Keep it up, man. Keep asking those questions. Honestly, it takes a little bit of time to find your footing, so don't take it personally. Everyone has a learning curve, and it just takes time to reset some bad habits. So don't worry, it'll all fall into place. And we'll keep finding trades, guys, right? We will keep finding trades. And if you can have just one day like Dwayne, you are loving life. All right, team. Well, if no further questions, I'm going to kill the stream here for the day. Congratulations to everyone who caught this. Awesome trade. Well done, guys. Absolutely crushed it. Wildly jealous, won't lie. But very happy if you guys are able to make some big money on that. Hopefully getting either people to payout stages or now through their evaluations. So keep up the good work here, team. We're going to keep stacking up those wins. We'll keep compounding those nice decisions. And at some point here, I think one of you guys are going to set a new daily high watermark that's greater than anything I've done here this year. So looking forward to the challenge being set by a worthy competitor. And we'll keep kind of pushing it and growing from there, guys. So well done here. Good job taking advantage of the market, being patient, controlling the variables we can control. And if you're in the same boat as me, right, where you missed that trade simply because of a poor execution process, well, the question to practice here today, the thing to work on, right, is that process. So if I'm thinking about what did I do well, what did I do wrong, what do I want to improve for tomorrow? Well, I got the trend right, identified the right setup, had the right idea, good position sizing, yada, yada, yada. But you know what? How I then actually make that event binary needs to be improved. And there are a few gaps in that process. So I need to focus on making that just a little bit more consistent, so that my entries are, again, right, based on if it hits a price, not if it hits a feeling. Because if I'm waiting for it to hit a feeling, it's never going to feel right. So that's the takeaway from here for today. Yeah, hope you guys all had yourselves a great session, crushed it. Love to see some of the positive numbers, and I want to see everyone's detailed daily debriefs when that opportunity arises. Otherwise, guys, we'll catch up in a few of our one-on-one calls here later this afternoon, and we'll catch up then. Peace.